This is a program about the Lincoln MoneyGuard Reserve, New York, a plan for paying for long-term care, which is a smarter alternative to self-insuring. In this video, we'll cover the facts about long-term care, how Lincoln understands how you feel about the issues, long-term care survey results, what to know about self-insuring, a smarter alternative to self-insuring, and we'll share some case studies. Lincoln MoneyGuard Reserve is a universal life insurance policy with optional long-term care benefit riders available for an additional cost. It is issued by Lincoln Life and Annuity Company of New York. It provides guaranteed benefits you can tap into to reimburse qualified long-term care costs. 70% of people over age 65 will require long-term care in their lifetime. The national average for long-term care costs in 2010, assisted living, $3,369 per month or $40,428 per year. Nursing home, semi-private room, $5,931 per month or $71,175 per year. Private room, $6,570 per month or $78,840 a year, while home health aid costs are $20.27 per hour. So this is quite expensive and can ruin your assets. Lincoln National Financial Life Strategy Survey, Long-Term Care. You know, the survey went to see many people, and it covered more than 1,000 individuals like you, ages 40 to 70, with 100,000 household income or assets. This is the results of the survey. People know the long-term care risks. They are not aware of the available funding options, and you may not be. Some think that self-insuring is sufficient. Cash or other assets in their portfolios are set aside to cover future long-term care costs. 75% of people will use savings to pay for long-term care, while long-term care costs can exceed $60,000 per year. How loved ones paid for the cost of their long-term care. 56% use savings, 32% used money from loved ones, family, or friends, 18% had to sell their homes, 44% declared bankruptcy. Why not purchase a traditional long-term care policy? Well, base product offers no money-back guarantee. It's a use it or lose it proposition. Premiums can be expensive, and worst of all, premiums can increase or vary. Other key statistics: 26% fear they will be a burden to their family. 36% with assets of less than $100,000 fear they will be a burden to their families. 39% are confident they have planned for the cost of long-term care. 55% over 65 have planned for the cost of long-term care, say they feel more confident generally. Some individuals have assets and investments, but see long-term care as just another potential expense. By self-insuring, they have control over their assets, no ongoing premium costs, assets for beneficiaries, they don't need care. This is a wait-and-see attitude. But the challenge is, what if it isn't enough? Costs vary and can far exceed expectation. The market doesn't care when you need long-term care. Stress, impact spousal income, family dynamics, these are the challenges. The advantages: asset control for your long-term care dollars, benefits whether or not you need long-term care. Let's look at a case where a $100,000 purchase with a CD for $100,000, you have control, it has no additional premiums, the assets left for the children, would be enough to pay for her long-term care expenses? Will it be? While MoneyGuard offers you control, no additional premiums for a one-pay policy only, assets for children, long-term care benefits worth multiple times your premium payment. Let's look at this chart. Life insurance creates potential savings. You pay the premium, you get a money-back guarantee or a death benefit, tax-free death benefit for beneficiaries, or long-term care benefits, income tax-free long-term care reimbursement. Consider buying a Lincoln MoneyGuard reserve policy with a portion of your cash reserves. Your policy remains an asset in your portfolio and offers you a money-back guarantee, and anytime you can request a return of your premium paid. The amount you receive will be adjusted for any loans, withdrawals, or benefits paid, and may have implications. An income tax-free death benefit. If you die, your policy pays an income tax-free death benefit to your beneficiaries. This benefit will be adjusted for any long-term care benefits received or long-term care benefits. If you need long-term care, your policy can provide income tax-free reimbursements for qualified long-term care expenses. So let's look at that again. It offers you first a money-back guarantee. It has an income tax-free death benefit, and it gives you a multiple of long-term care benefits. Let's look at this example. A $100,000 CD with a 2.8 after-tax return over 18 years would give you $164,390, while a MoneyGuard policy with $100,000 will give you $167,356 income tax death benefit beneficiaries, and that's immediately, or $502,068 income tax-free long-term care reimbursement, which comes out to $6,973 a month, or $83,788 a year. The risk only gets back the money. The policy is an asset in your portfolio. You can get more for your long-term care dollars. You can receive benefits whether or not you need long-term care. You have a money-back guarantee. Premiums never increase. You have tax advantages and choice of care setting. It could be a nursing home or in your own home or just an assisted living. Reimbursement for qualified long-term care expenses when the insured is certified as chronically ill by a licensed health care practitioner. Care is provided under a care plan prescribed by a licensed health care practitioner. The initial 90-day deductible period is applicable for most expenses has been met, and reimbursement is for covered expenses up to maximum benefit specified in the policy. Here's some hypothetical cases. Jeff and Ann, we want to protect our retirement income. Gloria, I want to get some more for my long-term care dollars. Joyce, I wish I prepared for a long-term care expense earlier. Dan, I like to plan ahead to keep pace with rising long-term care costs. Nancy, I want to protect my portfolio even if I need long-term care. Jeffrey, age 67, and Ann, age 62, healthy, non-smokers, financially secure because of just retirement income, $150,000 set aside for long-term care. What are the concerns? Jeffrey wants to help Ann's retirement income should he become long-term care or need long-term care. Recommendation: Jeffrey purchases a $150,000 one-pay policy with a 2-year convalescent care benefits rider and a 4-year extension of benefits rider. This is how it works out. $150,000 premium. First, you have $150,000 guaranteed money-back guarantee. Second, you have an immediate death benefit of $170,803 income tax-free death benefit for beneficiaries, or a guaranteed $512,409 income tax-free long-term care reimbursement. That's quite a return on your investment. Gloria, age 62, healthy non-smoker, has $7 million retirement portfolio, leverages $300,000 for long-term care. Imagine, that's only a small portion of her total assets. Her concern is, one, Gloria wants to limit her lifestyle and maintain her lifestyle, leave money to her beneficiaries, and establish a scholarship. The recommendation: Gloria purchases a $300,000 one-pay policy with a 2-year convalescent care benefits rider and a 4-year extension of benefits rider. Here how it works out. A $300,000 premium, which is 100% money back guaranteed, becomes a $469,790 income tax-free death benefit for the beneficiaries, or a $1,409,337 income tax-free long-term care reimbursement. That means that her family will not lose that $1,400,000 to long-term care thanks to her buying this $300,000 policy. Joyce, 76, healthy non-smoker, sufficient assets and retirement income, leverages $100,000 for long-term care. She's just taking a portion of her assets. Joyce wishes she had planned earlier. She's concerned she may need care due to a family history of Alzheimer's disease. Recommendation: Joy purchases a $100,000 one-pay policy with a 3-year convalescent care benefit rider and a 2-year extension of benefits rider. Here's how it works out. A $100,000 premium, of course, is money back guaranteed, which on a standard policy you do not get, or $109,480,000 immediate benefit income tax-free death benefit for beneficiaries, or $182,482 income tax-free long-term care reimbursement. Here's Dan, age 55, healthy non-smoker. He's financially secure. He leverages $100,000 for long-term care. By leverage, we mean puts aside. Dan's concerns wants to protect his children from the stress of managing his long-term care expenses. Recommendation: Dan purchases a $100,000 one-pay policy with a 2-year convalescent care benefits rider and a 4-year extension of benefits rider. Dan adds the 3% simple infection option to the long-term benefits rider to help keep pace with raising long-term care costs. Here how it works out. A $100,000 premium when or without any loans or taken, or if any benefits are paid prior to age 75, the investments return $100,000 guaranteed return of premium, or $180,928 immediate income tax-free death benefit for beneficiaries, or $841,315 income tax-free long-term care reimbursement. At age 75, his total long-term care benefit would be $841,000. His total benefit will be $77,539 per month, and his maximum benefit, once the continuing benefit rider will be exhausted, will be $12,967 per month. His EOR benefits will continue to grow each policy anniversary. Nancy, age 60, healthy non-smoker, sufficient assets and retirement income, puts aside or leverages $100,000 for long-term care. Nancy is concerned that she may need long-term care in a few years, but she thinks she has enough set aside to cover costs. Recommendation: Nancy purchases a $100,000 one-pay policy with a 2-year convalescent care benefits rider and a 4-year extension benefits rider. Here how it works out. The $100,000 has a money-back guarantee, or she has an immediate $167,357 income tax-free death benefit for her beneficiaries, or for her protection, a $502,068 income tax-free long-term care reimbursement. The process has an easy application, experience in claims paying, and the experience of Lincoln. Make long-term care planning part of your overall financial strategy. Talk with us. We're licensed insurance agents. When you consider a funding solution, make sure it has the features you need. This material was prepared to support the promotion and marketing of investment insurance products. Lincoln Financial Group affiliates, their distributors, and their respective employees, representatives, and/or insurance agents do not provide tax, accounting, or legal advice. Any tax statements contained herein were not intended or written to be used and cannot be used for the purpose of avoiding U.S., federal, state, or local tax penalties. Please consult your own independent advisor as to any tax, accounting, or legal statements herein. Lincoln MoneyGuard Reserve is a universal policy with a rider that accelerates the specified amount of death benefit to pay for covered long-term care expenses. An extension of benefits rider is available to continue long-term care payments after the entire specified amount of death benefit has been paid. The return of premium rider is available at issue on a one-pay policies. The amount of premium return is adjusted for any benefits paid, any loans or withdrawals taken, and may have tax implications. The cost of riders will be deducted from the policy value. The insurance policy and riders have limitations, exclusions, and/or reductions. Additionally, long-term care benefit riders may not cover all costs associated with long-term care costs incurred by the insured during the coverage period. All contract provision, including limitations and inclusions, should be carefully reviewed by the owner. Lincoln MoneyGuard Reserve is issued by Lincoln Life and Annuity Company of New York, Syracuse, New York, on policy form LN850 with a convalescent care benefits rider on rider form LR851, an extension of benefits rider on form LR852, a return of premium rider on form LR850, a terminal illness accelerated death benefit rider on form LR853, and a right to purchase a long-term care policy on endorsement form LR856. All guarantees and benefits of the insurance policy are backed by the claims-paying ability of the issuing insurance company. They are not backed by the broker-dealer and/or insurance company selling the policy or any affiliates of these entities other than the issuing company affiliates, and not makes any representation or guarantees regarding the claims-paying ability of the issuer. Accelerated death benefits may be taxable and may affect public assistance eligibility. For use only in New York. General exclusion limitations. The LTC riders will not provide benefits for a care provided in facilities operated primarily for the treatment of mental or nervous disorder. This exclusion does not apply to qualifying stage or care resulting from a clinical diagnosis of Alzheimer's disease or demonstrative organic brain disease. Will not pay for treatment of alcohol, drug addiction, or chemical dependency unless the drug addiction or chemical dependency is a result of medication taken in doses as described by a physician. It will not pay for treatment arising out of an attempt at suicide or intentionally self-inflicted injury. Will not pay for treatment provided in a Veterans Administration or hospital or government facility unless the insured or the insured's estate is charged for the confinement or services or unless otherwise required by law. Will not pay loss to the extent that benefits are provided under any of the following Medicare, including which have been payable but for application of deductible or co-insurance amount. Other government programs except Medicaid, workers' compensation law, employers' liability laws, occupational disease laws, and motor vehicle no-fault laws and also will not pay for confinement or care received outside the United States. Services provided by a facility or agency that does not meet the rider definition for such facility or agency. Also, except as provided in the alternative care services provision, and will not pay for service provided by a member of the insured's immediate family or for which no charge is normally made in the absence of insurance. Thank you. If you have any questions, go to our website, omniprotects.com. We also have quotes and more literature on request about this program. Thanks for watching.